Hi, I'm Dave,
And I'm Paul.
and we're going to challenge you to transform your financial future through the principles of the most profitable business in the world, banking.
We believe everyone should be involved in two businesses, the business that you're in and the banking business. Everyday people can replicate what bankers have been doing for centuries to leverage capital and build wealth through private lending.
Join us as we uncover the truths about money, expose lies and myths, and flip conventional financial advice on its head. Here we go. And we're back. What's up, Paul?
Not much. It's Halloween.
Yeah, we're recording on Halloween. So you guys got big plans?
We're going over to one of Anthony's friends' houses and trick-or-treating over there, I guess. I guess. I don't know what we're doing. I know she's cooking, so that's great because she's a good cook.
Oh, nice.
She's Korean.
Ooh, a little bulgogi and rice.
You know, I don't know what she's making, so I'm excited. But yeah, they're good. They're good people. They're our kind of people, if you know what I mean.
Cool.
Yeah.
I know what you mean.
He drives a Hellcat.
Oh, not many Hellcat owners around. Are you guys in a little club? You have your own Facebook group?
Just he and I.
Yeah.
Yeah.
Sounds cool. You guys just go out riding next to each other on the weekends.
Actually, we don't even talk. We just like rev the exhaust and just talk to each other that way. And the superchargers talk to each other. And
yeah.
They whine.
Yeah.
Well, how about you guys? You sticking around the neighborhood tonight?
Yeah, we'll stay in the hood. We got, I guess there's a cul-de-sac not far from here in the neighborhood where the guy who owns that house every year for Christmas, he goes all out, like Clark Griswold style, but so much so that he was in magazines, and I guess he started a business. So now he decorates other houses and companies or businesses around the area. But he does it up big on Halloween too. And I guess that's where all the parents go to hang out and congregate while the kids just go hit the neighborhood. So I'm sure that's what we'll do. Luckily, we probably won't have many visitors on our street because there's only 8 finished houses on our block. So all those kids will probably come by real quick. And oh man, I don't even have any candy. I just realized that. So
gee whiz. What's going on?
I'm gonna have to send the kids out early to go get candy and then come back to the house and fill a bucket up for them.
Yeah,
that's what I'll do.
No, it's good.
Yeah, I'll recycle candy.
That's right.
Like we recycle money. So
that's right.
Yeah. Speaking of, we got a text message from a client I'm working with today. He said, just a funny note from you and Paul's podcast. You talk about opportunities presenting themselves when you're in the right position to accept them. Mere moments after I just emailed him today that his policy got approved. He said just mere moments after that, an old friend of mine that I've sold 3 loans to messaged me for a cash loan with very favorable terms. Your podcast is literally manifesting opportunities.
Look at that.
So look at that. I guess we can take credit for that opportunity that came along for him.
Yep.
But he's already in the game doing private loans, but now he can do it in a much better format, put money to work in 2 places at once.
That's right. Very, very good position. So good for him. That's awesome.
Yeah. And he was also somebody that through just conversation of, how can I redirect money right now to put towards premium? He had listened to the episode on tithing and charitable giving. Sure. I was like, man, I do that once a year, and I can throw that in there as premium, can't I? I was like, yeah, well, you're storing it somewhere.
Yep.
Right.
Where is it?
Yeah.
Yep. And I love when people, once they understand just the mechanics, and maybe that's part of the mental block sometimes, is they're like, what, you can do this with whole life insurance? And, I think just boiling it down to, yes, your money can do all the things you want it to do. It's just going to originate from a different location. So instead of pulling it out of savings, you're going to pull it out of you're going to leverage it against your cash value,
right.
Cash value asset loan, or whatever you want to call it.
Exactly. You're never going to actually pull it out. You're never going to sell that stock, so to speak, and cash in on it and put it to work. So that kind of dovetails nicely into a clip we wanted to share. Good transition, Paul. I don't think you even planned that.
No.
So we're going to play this clip that I saw on LinkedIn this week, and I thought it was brilliant. Like, this is great. It's the first time I've ever put Senator Elizabeth Warren and the word brilliant in a sentence together. But what she says is she describes how Jeff Bezos funds his lifestyle, and she describes it like it's an evil thing to do.
Right.
But yeah, let's give this a listen and then give our thoughts on it. So here we go.
Let's look at someone like Jeff Bezos, who is worth $1 bazillion. He has not paid taxes on all of that wealth. Don't describe it that way. In fact, Jeff Bezos, many years, has either paid nothing in taxes or he's paid about 1%. Why? Because his income is very, very small, but he continues to grow his wealth through all of his Amazon stock. And how does he then fund a lifestyle like he does? Not by cashing in Amazon stock, but by borrowing against it. Right now, we have a tax system.
Boom. What did she just say? How does Jeff Bezos fund his lifestyle?
Well, he ain't selling stock. He's borrowing against it.
Holy cow.
Well, of course he is.
Where else have we heard that?
Yeah, Warren Buffett
Borrowing
does
against
that.
it. Yeah.
And which we've talked about on the podcast, right?
Yeah.
We talked about Warren Buffett a bit. And then at a much lower level, we do that.
Yeah. But, we're starting where we are. We're not
That's right.
the richest man in the world. But we can still do the exact same thing that Jeff Bezos does, which is just brilliant, right? Why would you sell and cash out of an asset that's growing for you and working for you when instead you could just borrow against it? Somebody's going to give you a loan against that because it's a pretty good bet. And then you use that money, and guess what? So hopefully everybody understands this, but if they don't, why is Jeff Bezos paying zero taxes and he can live a lifestyle spending millions of dollars a year doing whatever he wants? Because he's borrowing against that. Which, are loans ever taxable?
They're not. Yeah, it's not considered. It's not income.
It's not income because he owes it back plus interest to the bank. But what does he care? His stock is making more money than he's paying in interest to that bank.
That's right. And he's not disrupting, whatever compound curve Jeff Bezos is on. He's not interrupting that.
Right. Yeah. So it's so funny. She says this like it's such an evil thing to borrow against an asset and leverage an asset as opposed to just liquefying it.
That's right. We see a certain element in this country just punishing success. And it used to be celebrated. I think our grandparents' generation especially, like, success was celebrated. But there's always, it's Uncle Guido wants his cut. And when they can't get their cut so they can redistribute to somebody else who's less productive in the most inefficient manner possible, they get angry. And she's a bitter, angry person. But let's face it. All of our leaders, regardless, they spend a career, they're all wealthy, right? They're all the 1%, all of them.
Oh, for sure.
They come in poor, relatively speaking, and they leave uber wealthy, because of whatever, insider trading and kickbacks and whatever else they're doing. So,
yeah,
you could pretend that you're the, fighting for the middle class, and but you're doing the same thing with your accounts probably.
Right.
And if you're not,
and you can bet
if you're not, then you're foolish because you should.
Yeah. And you can bet if, her net worth is $3 million that we know about, there's probably another 30 million somewhere else, Ukraine, that we don't know about. Yeah. So it's such a joke, but the fact that people actually believe that that's a terrible thing that Jeff Bezos is doing. What about, let's say, we have a lot of real estate investors that listen. And even if you're not a real estate investor, you can probably follow this analogy. How many middle class Americans own a real estate investment property? Maybe just one rental home. I've owned rental homes during my lifetime. I would say a lot of people do at one point in their life, right?
Sure. Quite a few people do, actually. And it'll always kind of surprise you when you talk to them. Like, yeah, I've got a couple of rental properties. And you're like, oh, wow.
Yeah.
And
yeah,
a lot of people do.
So when you have a rental property, you have somebody else paying the mortgage for you. So you're building equity using somebody else's money, which is great. You're also hopefully getting appreciation, like, in the last few years, it's appreciated dramatically. Maybe
Sure.
that it's starting to slow, who knows? But so you've got all that growing. Now there's two ways you can access that the equity that you've built in that asset. Just like there's two ways Jeff Bezos can access the equity in his Amazon stock.
That's right.
Yeah, you
Yep.
could sell that home, that rental property, that investment property, and pay all the taxes, give a big giant chunk to Uncle Sam, and then you get whatever's left over. And then you can go spend it. Or what's a, a smarter way to access that equity?
Well, sure. If you're still in the game and you're not like retiring and don't want to deal with it anymore, go get yourself you're likely going to go get yourself a HELOC if you can get one, but let's assume in this case you can go get one. Yeah.
Yeah.
You're going to go leverage that equity with the bank and go do something. Maybe maybe this is a burst strategy. You'll get another rental, or you're going to, I don't know, invest in something else. Who knows? Do a private loan to somebody else. So,
Yeah.
but yeah, equity's dead money. You're going to go get it, and it's leveraged money. So there's no tax because you didn't sell the asset. It's the
Right.
way things are done. And good.
Exactly. And it's things middle class America does, just like the 0.00001% of the 1% does.
Right.
We know, I think inherently almost it makes a lot more sense to leverage an asset than to sell it, liquefy it, and pay all the taxes that the tax man's going to want for it.
Yep. I have a coworker, or had a coworker. He moved on to a different job, but a little bit older guy, 50, I think he's 56, been in the Army a long time, like approaching 40 years, his whole life. He was enlisted first and an officer, and now he's a lieutenant colonel, but he has done, the thing to do what a lot of people in the military do is they'll buy a place everywhere they've ever been. And so, he's got eight rental properties. They're all paid off.
Wow.
They've all got tenants, so it's just pure cash flow for him. And I enjoyed our discussions just talking about it with him. He's like, Paul, I never sell them. They appreciate. I got cash flow. I got tax incentives. And a guy who figured it out. From humble beginnings, right? This guy's from the tropics. He's very humble beginnings, and he's probably one of the wealthiest lieutenant colonels in the Army.
Yeah, that's great. And he probably doesn't live that kind of wealthy lifestyle.
No, he lives a very modest lifestyle. His truck is 12 years old.
Yeah.
So
great. So the average person can do that, just like the average person can do infinite banking. Because if you watch that clip again, and we'll post this clip in the show notes so you can watch the full thing. It's with a billionaire, Ken Langone, who I guess started Home Depot. He's the Home Depot billionaire.
Yeah, he might be kind of on our side too.
Yeah, he's interesting because he was talking at the beginning of that interview. I encourage everybody go in and watch this. It's like a 5-minute clip, but it's really eye-opening. He was asking her, he's like, why are you still sending me a Social Security check? You're sending me $4,000 every month, and you're sending my wife $1,000 every month. I'm a billionaire.
Right.
I don't need that money, but you're sending it to me. Like, why don't you start there instead of now wanting to tax, people for unrealized income or anything like that?
Oh my goodness. Right. I forgot she was one of the ones behind that brilliant idea. Oh my goodness.
Yeah. Or taxing corporations for their profits. Guess what? Corporations can minimize their profits almost nothing if they want to.
Yeah. And they do.
And they will. They do. Right.
And
it's pretty easy.
And gosh, operate within the environment, control the environment. Well, they can't really control the environment because the environment's been written for them through the tax code, but they can live within the environment, learn how to adapt to the environment, and therefore take advantage. And if it's not this fair share argument, what is that? What is your fair share, Dave, of the tax burden? Right? If you can just print the money, it should be zero. I could just print all the money I need. So why do I have to pay tax anyway?
All I know is my fair share is less than what you should be paying. Right? That's the mentality. Everybody else should be paying their fair share, not me.
That's right. Of course.
But the fact is, those corporations, the top 1%, doesn't matter what you say or what rules you put into force. they have the resources to not have to pay that, to not pay those taxes. They'll find another way around it legally through the tax code, which is written by the very senator that was speaking out against it. So they never put the blame on them, right? They're the ones that wrote it, yet they blame us for using it in accordance with the way they write it.
We spend so much of taxpayer money on wasteful things, right? That's one example of, why you're giving these people Social Security when they don't need it. Not that you should punish success. That's an earned right because you did pay into the system.
Right.
But still, it's a good point. Start there instead of, but this, it's just disgusting. Anyway.
Yeah. But yeah, another thing she goes on to say in there talking about how, the very top of the wealth pyramid, those people never get captured in the tax code. And it's the middle class that really pays the burden. And I will say the middle class bears the burden because that's the way the tax code is written. The middle class doesn't have the resources to shelter their money in that way.
Right. It's employees who pay taxes, right? If you encourage you to read Kiyosaki, folks, it's Cash Flow Quadrant, or one of the ones where he talks about, the business owner, the employee, the whatever, and you would be the right. And so employees like me, I'm an employee of the United States Army. I pay all the tax because I can't avoid it. So you got to figure out, interpret that tax code. That's why we have so many folks that invest in real estate and become millionaires through real estate, because in a certain type of real estate, typically commercial, is very advantageous. And it has been for the last several years. It has been for a long time for the Kiyosakis of the world, or the Trumps, or, whatever other names there are, where it's like, oh, you didn't pay any income tax. Well, I had depreciation.
I had write-offs. Yeah, depreciation.
I had other losses. I had maintenance. I had, name your deduction, and I had it. I had the Augusta rule.
Yeah. So, just following the rules.
That's
as they're written, right? It's just the way.
That's right.
All right. Sorry. Some of the family just showed back up. I thought I had a quiet house, but apparently I don't.
I can't hear a thing. I know you were going in and out of mute. That was pretty skillful there.
Yeah, I try. So if you're watching, you can see me yelling on mute.
So what I've done we don't have, I don't know how many people watch on YouTube. A few people do, because there's a lot of comments out there, but I'll do this and I'll yell.
Yeah.
It seems to work.
Yeah. Maybe I'll do that. I'll be a little more sly about it. Like a football coach hiding their mouth when they're talking. I don't know why they do that. Who's reading lips trying to figure out your plays?
I don't know. There's
the way they name those plays. You have no idea what somebody's running, even if you know what the play call is. Give me a break.
God, I don't even watch it anymore. It's getting so boring.
It is. I've actually stopped caring, and I'm a Chiefs fan, man. And when you watch a Chiefs game and it turns into a Taylor Swift concert, it kind of turns me off the football altogether. So I'm pretty much done with it. Unfortunately.
I don't care anymore. And I grew up a really avid sports fan. I just can't. I don't know. Whatever.
Yeah.
We watch our kids play.
Yeah. Yeah, that's a lot more fun, actually. So back to this video. What I want to tell everybody, watch that video, and anytime Senator Warren says Amazon stock, replace that phrase with cash value.
Right.
That's exactly what we're doing with this concept. Is you're paying your premiums. It becomes cash value. Right? That cash value grows uninterrupted as long as you don't interrupt it. Only you can interrupt it.
The company's not going to interrupt it.
Yeah, the company's not going to, but you could withdraw the cash value. That's your right. And you could do that, and you won't pay any interest on a loan or anything like that. But why would you withdraw that? That's the same as Jeff Bezos withdrawing his Amazon stock or selling his Amazon stock.
That's right.
Instead of keeping it in there, keep it working, compounding uninterrupted for the rest of your life till the day you die, and leveraging it for a loan. Best of both worlds. Now you got money working in two places at once.
Yeah. And we've talked about it on several episodes, the passive income benefits later in life that you can take off policies without paying income tax from, state level, federal, doesn't matter, is tremendous. And Nelson talks about that in the book, although he illustrates different ways to do it. He doesn't illustrate using loans, but he's an addendum where he says, I would use loans. So folks, it's, put you in a tremendous advantage. I was listening to some of our friends on their podcast today, and they were talking about, qualified plan money and how really, if you think about it, if you're a young person just out of college, 22 years old, you start putting money in your company's 401k, it's 38 years, basically, call it 40 years really before you can touch that money without, it's kind of like in a penalty box. And now people, IRS Rule 72T, Paul. Yeah, nobody does that.
Nobody does that.
Despite our not encouragement, but despite at least advertising it to people like, hey, you could do this. But anyway, you're putting your money in a penalty box, right? And that's why you're not looking for opportunity. And that's why another episode we had, Dave, was, IBC is freedom. A financially stable populace. There's $1 trillion of credit card debt right now. $1 trillion.
Ouch. Wow.
And, rates just went up, right? So the top tier credit card rate is probably 29%. Like,
I think that's legally the highest they can go, right? Like 29.99.
I think so. Yeah.
Because 30% is usury.
30%.
But 29.99 is not usury.
It's ridiculous, right?
Yeah.
So, again, just take a step back and think. Think about the process, think about the product, and how you can use it, uninterrupted growth of your money for life. That makes you, an unknown amount, really, depending on the premium you're paying, but it's going to make you wealthier.
It's
whether you believe it or not, it's going to make you wealthier.
It's going to improve your overall financial picture. Yeah, hands down.
Oh gosh, what a way to live!
And make everything so much easier. We were talking before this of the mortgage process. I mean, with you building a house and all that, and trying to get that done, and compare that to if you had all that equity built up in cash value. How much different would that process be?
Life would be better. I was talking to the guy at work the other day, and I was like, man, if all the money I'd paid into the 401k, the TSP for the military and IRA money as well, had that all been paid as dividend paying whole life insurance premium, heck, even if it were all base, it would still look great, 21 years, later, right?
Yeah.
But, structure for IBC with some PUA rider in there would have been, just fantastic. And so that mortgage process, right? Like I guess given all the documents they've asked for thus far, and I've done this, a dozen times probably at this point in my life, so I'm not like an amateur. I've got folders galore, from every single mortgage I've gone through, but I don't know what's going on. Either this is going to be the easiest loan I've ever done, and they're just like, yeah, great, Paul, good, looking good, approved. Here's your construction loan, or I'm just waiting for the underwriter to come back with, I need these 50 things. You moved $1 yesterday, and I need to know why you did that.
Right.
Anyway,
you know what?
So,
yeah, and imagine you have great credit score, great financials. Only the only commercial debt you have is the commercial debt you choose
want to have. That's right.
So imagine what this is like for somebody not in that situation, somebody with a worse financial picture. How much of a pain this is. The fact is, even if a bank knows right from the start they're not going to approve you, they're still going to go through the process with you so they can collect all your information.
Oh, of course.
That's the sad part, because now they got all your info.
Yep.
So, beware of that. But yeah, and so comparing that to if you had been doing what you said, and instead of funding that TSP and everything else, putting that money into dividend paying whole life insurance properly structured, how much cash would you have access to right now? And how easy would that be to do this loan process and work with a builder? If he didn't have to work with a bank and you said, I'm paying cash, wonder how much easier and better deal you could even get with a builder at that point.
It would, right. And that's, it's the, that strength, being in a position of strength in anything that we do in the financial world, whether we're buying something, building something, financing something. It's just it would be completely different, right? Because I burn, you burn minutes, which turn into hours, which turn into days, really, of your whole life of just collecting documents, downloading bank statements, sending down, turning them into a PDF, sending them to the bank, to the underwriter or to the loan officer or whatever. And it's just, and I hate it. I really do. It's so easy. I log into a policy, request the money. Here it comes. If I need a little bit more, there's a separate form. I fill it out, bing, bang, boom, scan it in. And I've got the cash in my bank a few days later, ready to do what I needed to do. And it's just, I can't wait to get to that point. I know, if we're still doing this, when that occurs, that's going to be a great episode, because we're going to get into detail of, what we did.
Right. Yeah. Nelson said, what does he say? It takes about 20 years to completely get out of that system.
That's right.
And become 100% self-financed.
That's right.
So 20 years is not a short time, folks. But if you think about it, look back to 20 years ago. I mean, how old were you 20 years ago, and how fast did that 20 years go?
It blew by, man. I was in flight school still.
Yeah. I just graduated college. So yeah.
It flies. It is flown by, and it's a blink of an eye. And but yeah, I didn't know what was going on back then, though, did I?
Yeah. But had you started then, or you could start now, the next best time. And 20 years from now, you could be completely free, and your family could be completely free. It's not just you, your kids.
That's right. That's the idea. We want to meet our own needs, right, as a family, and then we also want to meet other people's needs. And that's what Nelson also talks about later, right? Is after you meet your needs, you're going to meet other people's needs, just like you started your own bank, just easier.
Yeah, exactly.
And guaranteed.
And guaranteed, baby. Yeah.
What's that worth? I don't know. To me, it's a lot, especially as I get older.
Yeah, there's not too many guarantees in life anymore.
Mm-hmm.
Right? They always said death and taxes. But let's add a third: death, taxes, and whole life insurance.
Yeah. It's there when you die, not if you die.
Yep. Nice. Well, all right, man. So yeah, I think that clip really highlights exactly what we do and what we preach. Some people can do it on a bigger level, like Jeff Bezos, and do it on the level of billions of dollars worth of stock. Others of us, not so fortunate, can still do it on the level that we're at. We start where we're at and we build from there. But we're doing the exact same thing, building wealth the same way that the billionaires continue to build wealth.
I got nothing else to add to that, Dave. Brilliant.
All right. Good deal. Well, hey, you guys, I guess it's a week past Halloween by now, but Paul, you guys have fun tonight. Be safe, get a lot of candy, and we'll do the same. Pick out, what do you usually steal from their bag?
You know what I've been going for lately is milk duds. Not a lot of kids like them. I've always liked milk duds.
I hate them. They get stuck in your teeth. You can never get them out. It's the candy that keeps on giving for hours.
Right. I mean, a couple hours later, you'll get a piece of caramel and a molar back there. It's
you're like, oh,
you're like, oh, great.
That's great.
But I like, I like Twix. I like Kit Kats, but I like Kit Kats frozen, and I like Reese's, the little peanut butter cups. I like those frozen as well.
Yeah.
So I'll get some like a glass of milk, and I'll just grab a couple of Kit Kats, and I have to have an exact milk to Kit Kat or chocolate ratio. So plain Hershey bars too. Love those.
You sound like such a fan.
Anyway, how about you? You're a big Twizzler guy.
Yeah, but I don't like the little package ones. They kind of taste like plastic. I'm not a fan of those.
They actually might be plastic.
They might be plastic. I might have been eating plastic my entire life.
I like Starburst too, the original.
Starburst. Is that how you say it in Massachusetts?
Starbursts.
Yeah. Yeah, I don't know. I just take it when they're not looking, crunch it up, put it in the ice cream. That's a nice little snack.
Also do that as well. Yeah.
Yeah.
That's good.
All right. Well, hope you enjoyed, everybody. And we'll see you next week. Until then, control your capital.
Or somebody else will.
Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle on a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.